Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for November 1st, 2007. Well, Thursday was an absolutely wild day, and when I mean wild, it was just off the hook here. Now you saw some major selling. We had the Dow down over 350 points, actually a total of 362 or 2.6%. The Nasdaq fell 2.25%, down 64, and the S&P fell 41, down 2.64%. Now this is just crazy, and I'll talk to you guys about this because in yesterday's video we had a weird rally on the Fed, and I'm going to get into that in a little bit, but I just want to show you guys, and the futures are still trading to 415. It's almost 415 now. But the futures, as you see here, this giant spike down on the futures on the daily. This is the ES future chart daily, and that's why we're able to view this so accurately here, is because it's still trading. Now, what did we see yesterday? Yesterday I had talked to my partner and I had said, wow, this was interesting. And I talked to the chat room today earlier in the day and said, I really frankly didn't understand the move up yesterday. The Fed said we're worried about inflation. We're worried about inflation based on oil prices being so high, gold prices being so high, all commodity prices being so high, and we're cutting a quarter point in the FOMC rate and the Fed funds rate and in the discount rate, and don't expect any cuts in the future. And the market sold off, and I thought that was the right move because now they're saying no more cuts. Sorry guys, no more cuts. And then all of a sudden, later in the day, we had this huge rally, and I was shocked. My mouth was open. I couldn't believe it, but it is what it is. And we had closed above the 20 moving average on the daily here, on the ES chart, and on the Nasdaq, we had actually seen another move up, which had gotten us above this double top here, and I'll go into that more here. But the key here, folks, and this is really the key, is that what was so unique and interesting about the move yesterday is that we had talked yesterday in yesterday's video and said we have to have confirmation today. And if you go back in yesterday's video, you can see where I say that on both ES and on the Nasdaq. We talked about confirmation today. Because if you don't have a confirmation, meaning the break of the high, and I talked specifically about that in yesterday's video, it's not a true breakout. Alright? And lo and behold, look at what happened today. The markets get crushed. 360 points down on the Dow. Almost 65 down on the Nasdaq. Just an ultimate bloodbath, and we did not break yesterday's high. In fact, on the technical side, we got major damage done to the downside. And for the first time in a while, the markets closed at their low. A week and a half ago or so, or last week when we had a very big sell day, we saw some interesting things happen, meaning that later in the sell-off, towards the end of the trading day, you'd have these monster rallies. The Nasdaq was down 75 points at one point last week, I believe at the very beginning of last week or the Friday before, and the market rallied this back only down about 30 points. And everyone said, wow, look at this, monster move. And lo and behold, what happened? Well, today, maybe people expected it. I half expected it because it's been happening for a while, but I knew at some point it's not going to happen. At some point, the rug's going to be pulled out from under this market. Now, who knows if this is today? I'll be frank with everyone here listening to this video. For all we know, the market's going to rally up. Who knows? Tomorrow, the next day, we might go back to new highs because that's what's been happening. But I do have to say, and I said yesterday, is that at some point, there's got to be a little bit of a panic put back in this market. Every time the market's been saved, the buy program comes in and we just fly up huge. Well, guess what? Maybe today is, maybe not. We'll find out in the following day. And now, just like I said, we need confirmation yesterday, and you guys can see the ginormous sell-off here. Just like we needed confirmation on the breakout yesterday, tomorrow we need confirmation on the breakdown. And I'm going to point some stuff out. So let's get our trend tools out and get right into this here. And I just want to point out, you guys should be all in the chat room at this point. The chat room, we talk about all these breakups, breakdowns. Obviously, yesterday, and I couldn't point this out in yesterday's video, but we took a position in the QID, and the QID is 2 times short the Nasdaq. And obviously, we know what the Nasdaq did today, down 65 points. So overall, that QID was up sizably here, and I'll just show you the chart quickly before we get into this analysis. Here's the Nasdaq close yesterday, and here's where it ended today, up about $1 today. So a very nice move. Here it's finding support on the 200 intraday moving average. But in any case, that was the trade from yesterday to today, and we continue to have some nice swing trades in the chat room as well as day trading, and we'll just continue doing what we're doing. Now, the swing trade alerts have been going phenomenally too, and I can't point out what we're in right now, but I said yesterday that we have short positions in this market, and we continue to have those very nicely. Now, what I'm going to point out here, and we can't see the futures chart here now as we talk about it, but what I will show you folks is the intraday NASDAQ and the daily NASDAQ. Now, yesterday we talked about this double top, okay? And this double top was very interesting here because we broke above, but again I said we need confirmation. And we didn't even do that today. In fact, we had a total opposite move. We gapped down almost to the lows of that candle and we closed right on the 20 moving average. Now this yellow line is the 20 moving average on the daily. And that's going to be big time here, folks, because what this is going to do is now we have to start looking for possible breakdowns. Alright, and we have trend lines. Number one is the trend line here. Okay, and this is going to be, if we break this 20 moving average, this is the next line of support. Alright, and number two, we can look at a trend line right here which coincides with the 20 moving average, and you're connecting the lows here of the recent. So this is the near term support, and it's coinciding right with 20, and the little longer term support here would be this line here. Okay, and this is all in the NASDAQ. Now again, listen, for all we know, we're going to break back above this line, this double top line. If we move above that and close it in the coming days, then all of a sudden you say, okay, well now all of a sudden we have to look on the long side again. But for now, it's right in this channel, and I want to point out this triangle. You have a triangle with a flat top and a moving up here. It's going to break out one way or the other, folks, and we thought we had a breakout possible yesterday, but it didn't confirm it today with a move higher. Alright, and now we're looking at a possible breakdown as we are sitting right here on the moving average. And should we close tomorrow below that 20 moving average, then we can start to possibly look for a fall down to this point here. Okay. Now, again, what we were pointing out before, and again, and this is on the ES, so we're going to use the spiders. The spiders is better because you all can look at that at home too. A lot of you guys don't have access to the S&P futures. But this is what's so key about this. Yesterday on the S&P, the ES futures, and the spiders, we talked about a breakout above the 20 moving average. But again, we said yesterday, it's got to be confirmed. Got to be confirmed. Not only that, but I want to point this out. Look at this volume. Alright? And this is most of the move up here. Alright? Volume, volume. Lighter volume, especially these two candles right here. Very light volume. Now that worries us, and we always say we like to see heavy volume on whichever way the market needs to go, or should go. You got to see heavier volume. Now, again, we saw a move above the 20 moving average, but we said you got to confirm it with another move higher. And a confirmation is a break of the high and a close above the high. You get a close above that high, and it's confirming the long, and you can go long. Now, we didn't get that today, did we? In fact, we got a sell-off the opposite way, taking out not only this bar yesterday, not only this one, this one, this one, this one, but all the way down to this bar here. Alright, and the close basically coincides, and you can just do a little coinciding bar here with the lows down here. In addition, the S&P, which has been weaker, thus instead of closing, like the NASDAQ closed on the 20 moving average to the downside, the ES and the SPY, the spiders, closed on the 50 moving average. In fact, we actually closed a tick or two below the 50 moving average. Now this is support here, no doubt about it. And again, we can draw our trend line here, and you can draw it here if you want, and technically we broke that, but the new support line is definitely the 50 moving average. Now again, let's draw this line from here and see where this takes us. Now, should we break below this 50 moving average, the next line of support is technically right here, which is going to coincide basically with the 200 moving average. And again, the 200 moving average is this purple line. So, again, we have some major issues in this market. Oil did retreat today, was down about $1.50. In addition, gold pulled back a little bit, but the Citigroup news was really the big catalyst, I feel, for the down move. And the Citigroup had some negative downgrades today and some negative comments on it, and we saw the financial sector drop 5% overall. That's the biggest drop in the financial sector in 5 years. Okay, that's a big time drop. And again, it's got to be looked at as finally reality could be setting in. And again, I say finally, but let's be honest, folks. Every time it's looked like we've sold off, like right here, maybe we're going to fall hard here, they rally it. And right back here, maybe they rally it. And going all the way back to August 16th. So we need confirmation, and I can't stress that enough. You got to have confirmation in order to play this market successfully and safely. And safely is the key word. And again, anything I say should always be taken with a grain of salt. And I strongly advise you all to consult your financial advisors before making any financial decisions, whatsoever. Your financial advisors have your back, and you should always use them. What I say here is just my humble opinion, and it's just my opinion out of thin air. So please take it with a grain of salt. Now again, it's going to be key here, because we got to see, do we break the low tomorrow here? Now the question is, do we gap down tomorrow? Because with Asia, Asia's probably going to get hit tonight. And I would definitely say that at least Asia will get hit pretty hard tonight. And the question is, does that affect the gap down tomorrow? And we'll find out very soon, as the markets will open around 8 o'clock in Japan. So again, we're going to monitor that situation. And we see this pattern, and this is a recurring pattern. And you can see it here. To the upside, you either have a move and a move higher, move down, a move higher. Now you've had a big move down, a small move higher, and the question is, do we take out this low? This is what I'm watching for now, folks. And really, when we talk about the low, we want to see the 200 getting taken out, because this is going to be major support. This 200, should we come down, there's going to be major support. And we should bounce there initially, but if we were to break, then the floodgates could really, really open. So in any case, folks, be very careful here. Keep watch on tomorrow. We will talk about it in tomorrow, whether or not we confirm. And confirm is the biggest thing I'll leave you with today, guys. Do we confirm? Have a wonderful day. Take care.